Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look here at some of the small caps. A lot of the traders in the chat, they prefer the small caps. Everybody's been playing the coronavirus plays. I'm going to try to go over this a little bit quicker than the last video. If you look here at AHPI, this has been a big runner. It's on a big multi-day run, up 171% today. So congrats everybody that's making money on this. Keep an eye on RSI up here. You can see it's at 87, so it's pushing really hard. I mean, hitting up there around 90 or so, it makes it frothy. It's getting a little bit ahead of itself here. You have Fastow at 84. You can see here it's getting close to where Plus DMI topped out last time back in January. So when the green line hit up there, that's where it peaked. You can see it's pushing well above the upper Bollinger Band here, which is at 639. If it does get a pullback, what you want to see is EMA 4 at 594 hold. If it were to drop below EMA 4, it could come down to EMA 8 and fill this gap between the two candles. Now there's a big gap here. Notice the giant volume spike today. MACD is getting very parabolic. Look how perpendicular that is. That signals that the move is unsustainable, so it's not going to be able to keep this trajectory for too much longer. When a stock is breaking out, you want to look at the weekly or monthly chart, a longer time frame, to find key resistance levels. You can see up here on RSI, it's hitting up here at 86, so that's a super frothy level for RSI. You've got Fastow above 80 at 86, another frothy level. What happened is it came over here and it hit this 11 level, which was from back here in 2009, 2010, 2011. This was a previous top level. Look how it failed to break that for many times and then pulled back. And so really for APHI to head higher, what it's going to need, or AHPI to head higher, it's going to have to break above 11. Now if it fails to break above 11, check out the 300-month moving average at 842. That's going to be the key level to hold. As long as it stays above this 300-month moving average, it can still push higher. It could possibly head back up to this 14-15 range, which was from back here in 2008. If you see it drop below 842, the downside risks, it comes down to the 200-month moving average at 680. Look at the giant volume on this move. I mean, this is a 10 bagger. You can see here it was at $1 down here, and now it's now it's made its way all the way up to 11 bucks. So congrats everybody that's been trading that. Now let's look at Lake. The maker of the mask. These guys run every time there's a pandemic scare. Ebola, MERS, SARS, whatever it is. This thing gets moving. You can see here we've got RSI now at a very frothy level at 79 on the daily chart. Previous top level right here where it topped out before. You can notice that Fastow crossed back below 80, so that's a red flag that it's cooling down. It hit up here at 23 and people locked in gains. You can see it's pulled all the way down to 19. Huge swing from low of day to high of day. The key really is all about EMA 4 at 1685. Notice the candles have been riding that level higher. We called the bounce back here last week, and it's been heading higher ever since. So congrats to everybody in the chat that was following the technical analysis. The close back above EMA's 4, 8, and 13 signaled more upside, and then the move above the middle Bollinger Band signaled that it was back in play for a bullish move. And so yeah, it's been really rocking, but now it's showing some signs that it's topping out here, or at least that it could cool down for a minute. So on a pullback, look for 1685 to hold if it's going to remain strong. If it drops below 1685, like it did back here, then it could pull back and consolidate. It's going to have to break 23 to head higher. So let's take a look at the monthly chart. So the monthly chart shows Lake is now at 70. On the big rally back here in 2014, I believe that was the whole Ebola thing. It topped out above right around 80 on RSI, so it's starting to hit that frothy level. It's got a nice push above horizontal resistance. You can see since that Ebola thing, it had been going sideways for the last several years, and then the break above high close horizontal resistance above this red line, that signaled more upside potential. So you want to see Lake stay above 16. Okay, if it can stay above 16 and keep this bullish uptrend going, who knows? It could possibly work its way back up to that 2930 zone that it hit back in 2009. 14. Now, if it drops back below 16, that's going to be a major red flag, signaling that it could get sucked back into this channel and continue that sideways action. Okay, let's take a look at IBIO. This is a big winner today, up 120%. Congrats to everyone trading. Now it's 77 on RSI. You can see it does not like to get above 70 on RSI. Usually it doesn't stay above that level for very long. It came up and it hit 90 and pulled back. Yeah, just real quick, you can look at plus DI and you can see it's hitting, it broke above that level in August where it topped out at. So RSI is signaling, or plus DI, that's the green line on 80 over here with plus DI minus DI. That's signaling it's getting a little frothy here. What it has to do is break above 90. 90 is this resistance zone from back here. That was the high close from back in August. Even though it ran all the way up to 140 in August, it actually only closed at 90, and that signaled the start of a big pullback. So what it has to do is got to hold this like 75 zone that it's at right now and then get above 90. What you really don't want to see is a drop below the 300 and 400 day simple moving averages. That's the blue and black line. If it were to drop below 61, that'd be a major red flag, and this gap between high of day yesterday around 36.37 and low of day today around 49.50, that could fill. It could pull back to fill that gap. If it can hold above 65 and get above 90, it could possibly head back up to 140. Look at the giant volume spike today. Keep in mind, this is already on a multi-day run, so you have to be careful chasing at this level. Below 90 is going to signal consolidation likely coming. Okay, let's take a look at Mark. I know a lot of people were trading this in the chat. This is what we call a major bull trap. It formed that nasty black candle that I personally do not like. The black candle forms when the stock is up on the day, but it's trading below the open. And so it's slightly up on the day here. It ran all the way up here to what was the 300-day simple moving average at 111, almost hit that level. It topped out at the July resistance zone. So you can see it topped out and then it pulled back. I mean, that was a big pullback all the way down to the 200-day simple moving average. You would have expected that level to hold, but it didn't. It broke below. So, people really got burned today that jumped in too high or didn't sell soon enough. In order to head higher, it's got to get above 79. If it fails to get above 79, it's going to signal more consolidation. So bullish above 79, has to break 111 to get a big move back up to this 125, 130 zone. Now, if it drops below the 100 SMA at 64, that's the gold line, that's going to signal downside risk. Okay, so let's look at the intraday chart. We're going to look at a 15-minute chart here for Mark, and I just want to show you the black candle phenomena. It started trading below the open. I usually like to, if I was in overnight, I would lock in gains here. I know other people have different strategies, but that's how I like to play it. It pulled back. Okay, so let's say you were like, no, I'm going to stay long. Well, when it failed to hold EMA 4 here, this red candle, that was your signal you had to lock in gains if you were in from the day before. So anybody that held from overnight and didn't lock in those gains, they gave back all that money and they could even be underwater. And so now what you need is the green line here. That's the 50 SMA at 685, and then also the middle Bollinger Band at 71.5. So it needs to get above these two levels, the green line and the dotted purple line. If it gets back above 71, it could possibly retrace back into the 90s. If it drops below 685, that's going to signal more consolidation. You can see it bounced off of the 60 support zone. This is where the 400, 300, 200, and 100 simple moving averages are on the 15-minute chart. It has, this has that head and shoulder kind of look to it right now, where you got a shoulder, a head, and another shoulder. So it's just going to be really crucial that this gets back above 76, which was the high close from yesterday, in order to signal that it wants to get back into the 90s. I would be very cautious staying long on Mark if it drops below 685. Okay, thanks for watching this small cap video chart. I'll work on getting more charts and technical analysis posted. Thank you.